Hey guys, welcome back to my YouTube channel. My name is Mobile Shabane and this is Nugget for Your Wallet. This is a place where we share pockets of tips and wisdom on personal finance. I'd like to send a warm welcome to all our new subscribers. The community is growing and I am loving it. If you have not subscribed to my channel, please make sure that you do that right now by clicking the red subscribe button, turn on the notification bell so that you get notified whenever I upload a new video. I upload new videos on a weekly basis on a Wednesday, and on a good week I upload 2 videos. So make sure that notification bell is turned on so that you get notified whenever I upload a new video. Thank you so much also to you guys, those who have been engaging on the comment section. I really appreciate the feedback. I appreciate the engagement. So let's keep it going. Let's get to today's episode. What are we talking about? Today we are talking about money myths. Yes, there are myths around money. There are a number of widely held ideas and beliefs about money, and these can be taken as true at face value, but when deeply scrutinized, these can be found wanting. These are money myths. Money myths are particularly dangerous because they can lead a person to make a financial decision that has long-lasting and serious consequences. That is why today we will be bursting some of the money myths so that we are all equipped and well-informed and none of us make financial decisions based on money myths. We'll be looking at a couple of them and I'll be explaining why these ideas and these beliefs are myths. The first myth that we're going to be bursting is that it is better to buy property than to rent. I've heard a couple of people make the statement saying, oh, you rather buy your own property than to rent, because if you rent, you're helping someone else pay their own bond, whereas you can buy your own property and pay your own bond. There are several dangers with this myth. The first danger is that this myth makes the assumption that bond payment is the only cost associated with owning a property. There are other costs that are associated with owning a property, such as rates, levies, property maintenance, and other costs that you need to consider and ask yourself and check if you are able to afford this in addition to the bond payment. And if you can afford all of them in totality, only then can you say that you afford buying a property. And these other costs can add up to a couple of thousand rands depending on where the property is situated. In addition to that, bond payments are linked to interest rates, which means that your bond payment installment will increase if the government, Reserve Bank, decides to increase the repo rate, as it has been the case for the past couple of months. On the other hand, renting is more like the amount of rent that you pay is more fixed for at least a year, as majority of the lease agreements are for a year. Another thing that you need to consider is that renting versus buying also has 2 different time considerations. Renting is more of a short-term decision, as the lease period is normally for a year, and you can also change the property should you decide that you're no longer able to afford it or you don't like the property. Whereas if you decide to buy a property, that's more of a long-term decision and thorough consideration needs to be made. So based on the above factors that I just mentioned, which are a few of them, it is clear that the statement it is better to buy than to rent property is a myth. Although I've said this, please don't take this to the opposite extreme and say it is then better to rent than to buy. There are different considerations that needs to be taken before we can actually see what is best for each person. So circumstances are not the same for each person, and that decision also will be based on factors such as how long are you planning to stay in a certain area. Say for example, you work in Durban but your family is in Eastern Cape, and you have decision or have desires rather to be based in Joburg. Why buy in Durban? So you see that there are different factors that need to be considered. There is no one size fit all. So the statement it is better to buy than to rent is a myth. It really depends on each person and it depends on each person's circumstances. The next myth that we're going to be bursting is that if you can afford a car installment, it means that you can afford that car. I know, guys, this sounds obvious, but there are people who still believe that if I can afford the car installment, means that I can afford to buy a car. There are other costs that you need to consider before you make a decision of whether you can afford to buy a car or not. These costs include your car insurance, petrol, and car maintenance. It's very important that you consider all these costs together in assessing your affordability. The other concepts that makes this myth believable is what financial institutions do when they do the affordability check. Often a person hears that they qualify to buy a car that costs X amount of money, and then they think that it means that if I qualify, it means that I can afford it. No, it doesn't mean that. You need to consider the other cost when assessing if you can really afford. The fact that you qualify for that car does not necessarily mean that you afford that car. Also, guys, please don't listen to salesmen. Car salesmen, don't listen to them. Because often a person goes to a dealership wanting a particular car or wanting to make the decision, and they come back having bought another car. Sometimes they don't even afford because the salesman has convinced them otherwise. The other tactics that the car salesmen use is that of including a balloon payment when they're working out your car installment so that you feel comfortable with the installment that you are paying. A balloon payment is an amount that you need to pay as part of your final car settlement and is often considerably high. That is why I really say it is not wise to listen to salesmen advice, as majority of the time the advice that they give out is the advice that will benefit them rather than the advice that will benefit you as the customer. What I advise is that do your research, make your assessment, and be honest with your affordability. Check, after I've considered the car installment together with the other costs, can I really afford this car? So the assumption that if you can afford just the car installment, then it means that you afford the car is a myth. And please don't make any financial decision based on this myth. The next myth that we are busting is that you need to pay the minimum installment. Credit providers are required by the National Credit Act to inform you of the minimum installment that you need to pay after they've taken into account the credit period and the interest rate that they will be charging you. Many have taken this minimum payment as the only amount that you can pay towards your debt. This is a myth. Majority of the financial institution, they really bank on you paying just the minimum amount of installment, because they know that if you do that, they will get the maximum interest from you. Paying a little more or paying more than the minimum payment is a very good habit because it assists you to pay your debt quicker and also pay less interest. Also, paying more than the minimum installment can also assist you to improve your credit score as it decreases your credit utilization ratio. Okay, the next myth that we are busting is that more income will result in more wealth. This is a myth. It is what you do with that income that determines if it will increase your wealth or not. Wealth can be defined as the value of your asset. It is often the case that when a person's income or earnings increase, say for example the business is doing well, if they're in business, or they get an increase at work, that some people change their standard of living. They upgrade their car, go to like expensive restaurants, like splurge their money because they have now a little bit more money in their pockets. And this act basically leads them to have less disposable income for them to invest into assets that will actually increase their wealth. So it is a myth to just assume that the more income would lead to more wealth. It is what you do with that income that will determine if it will increase your wealth or not. The last myth that we are busting is that you need a lot of money to make investment. This is a myth that is keeping a lot of people poor. Investopedia defines investment as any mechanism used to generate future income. This can be buying an ice cream machine to make ice cream, or buying a popcorn machine to make popcorn to sell it out. That is an investment. That is a full investment, same as buying an investment property or buying a car for an Uber. So don't think like big things when you think investment. It can be anything, any mechanism that you put in place to ensure that you get future income. Other investment, you can even put aside 100 Rand or 200 Rand on a monthly basis, like for example into unit trust or into buying shares. And the beauty with investment that is especially linked to interest is that it can exponentially grow over a long period of time. This is because of a concept that is called compound interest. Simply put, compound interest is earning interest on your interest. Albert Einstein says compound interest is the eighth wonder of the world. Those who understand it earn it, and those who don't pay it. All in all, what I'm saying is that you don't need to have a lot of money to invest. Start investing now, no matter the amount that you have. Do your research and you'll definitely find a vehicle or a mechanism in which you can invest the amount that you have, and that way you grow your wealth. As I conclude, there are many money myths out there, and the ones that I've mentioned is just but a few. What I'll say is that before you take any advice from anyone, do your research. There is tons of information available. We have platforms such as this one where we are sharing information in order to ensure that you are equipped with knowledge and that you make a good decision. So don't take anything at face value, question everything, and make sure that you do your research. Remember, the fact that you can afford a car installment does not necessarily mean that you can afford a car. Buying a property is not necessarily better than renting. It all depends on different circumstances. You don't need to pay the minimum installment. You can pay just a bit more. In that way, you pay your debt quicker and you pay less interest. And also the other myth that we have burst is that you don't need to have a lot of money to invest. Invest as little as you have. In that way, you are slowly building your wealth, and in that way, you are making better decisions for yourself in order to ensure that you are happy with your decisions also in the future. So yeah, this is the end of our episode for today. I hope that there is something that you're going to take away from this episode. Please make sure that you share with other people. Leave a like, leave a comment. Tell me what are other money myths that you have heard, or what are other assumptions that you have that you're not sure if they are true or not. Let's engage in the comment section. Let's grow together, and let's make sure that we don't make any financial decision based on money myth. Don't forget to subscribe to this channel and turn on the notification bell so that you get notified whenever I upload a new video. Thank you so much for clicking on this video and for watching. I really appreciate it. See you next time.